Hello traders, you're welcome to this video. In this video, we are going to be discussing a strategy for trading Euro USD, the euro against the dollar. Okay, we are going to be discussing a powerful strategy which you can use to trade this pair, and the Euro USD is one of the most traded pairs in the Forex market. Okay, now we are going to be going through different this video is going to contain a variety of information, so you might want to stick to the end so that you don't miss out on anything. So first of all, we are going to be understanding market structure. Okay, now this is the euro USD pair. As you can see, we are currently in the 4-hour chart, the 4-hour time frame, but you can, of course, you can trade on any time frame of your choice. Now, market structure helps you read the flow of price. Basically, that's what market structure involves, the flow of price. Okay, so you are going to know when to trade in line with the trend or consider a reversal. So whether you are a trend trader or whether you trade reversals, whichever case, you need to understand market structure. Now, first of all, how do you identify an uptrend? Basically, an uptrend is identified when you have higher highs and higher lows. Okay, like we can see that this pair was making, this is a low, this is another low. In fact, there is no need for me to, let me just use this point. You can see that this is a low, right? This is the first low. Then we have another low here, is a higher low. You can see we have another low here, is another higher low. You can see this low, and then we have another low here. This is another higher low right here, and then we can see that we are also having higher highs as well, right? We can see that this was a high, and then we had a higher high, right? We had another higher high, and we had another higher high. Basically, what this means is that the subsequent high is higher than the previous high, like that. You can see. So this is an uptrend. This is an uptrend. Okay. So remember, we are trying to understand market structure right now. Now let us look at a downtrend. A downtrend basically means recording of lower lows and lower highs. We can see this at this point we had a downtrend. Okay, you can see that this was the first high. In this case, this is going to be the first high. Then here we had a lower high, right? And here we had a lower high, and here we had another lower high, right? And then here we had a low, okay? And then we had a lower low, right? Hope it's very easy to understand. Then here we had another lower low, and then here we had another lower low. Okay, so basically this is an uptrend which is which is signified by higher highs and higher lows, and then this is a downtrend signified by lower highs and lower lows. Now another thing for us to understand in terms of market structure is consolidation. I'm just going to remove this since it is following my charts. Okay, but I hope we have understood this so far. Now, consolidation is a situation whereby price moves sideways is referred to as consolidation. We can see around here, we can see that price was moving sideways. this zone like this, we had a consolidation when price moves sideways between a resistance and a support, between a resistance and a support. In that situation, price is moving sideways. Okay, now I'm just going to bring back all this. Okay, and we are going to go back to where we found both the bullish and the bearish structure. Okay, that's somewhere here. Okay, now we have identified consolidation, we have identified uptrend and downtrend. Now what I want us to do now is to know how to trade with these uptrend, downtrend, and consolidation that we just identified. So in an uptrend, you want to be looking for only buy opportunities. Okay, so once the first low, the first high, the first higher low, and the first low, the first high, the first higher low, the first higher high, and has formed. Yeah, once you have this first wave form, the first wave like this, the second, and the third, you can look for a buy opportunity, because by that time you already have two low points. You already have two low points, so you can look for buy opportunity at the third point. Okay, now once you enter, you set your stop loss below the trend line. All right, set your stop loss below the support that just formed. So as we enter a buy here, we set our stop loss just below that support, and then because we have already drawn a trend line, this is a channel, the price is trading inside this channel, so we are going to set our take profit, or we are going to exit our trade manually when the price gets to the trend line. Now for the downtrend, trading the downtrend is just the reverse. Once the high has formed, the low has formed, the first lower high and the first lower low has formed, you can now enter a sell trade at the next lower high. You set your stop loss right above the trend line, above that swing high, and then you can exit your trade once price gets to the dynamic supports. Okay, so basically that is it for the uptrend and the downtrend. Now, EURUSD is one of the most commonly traded pairs. The spread is low for EURUSD. So if you are a new trader, or even if you have been in trading for a long time, EURUSD is like one of the best pairs that you want to trade. Okay, and in the EURUSD, some of all these popular chart patterns, you can find it on the EURUSD chart. Okay, so you are going to likely find trading EURUSD comfortable. All right, now let us go to the consolidation. Let us look for a consolidation. Now we've already identified how to grab opportunities on during an uptrend and on a downtrend. Now let us just go back to consolidation. Okay, now during consolidation, when price is moving between support and resistance, you just want to look for breakouts. Basically, look for breakouts with a strong move. Okay, so make sure that you identify your support and resistance properly. Yeah, so when you have a breakout, remember we have already discussed breakout in a previous video. Most of the times when there is a valid breakout, there's usually a tendency for a retest. So once a breakout happens, if it was a breakout in the upward direction, just try and look out for a retest. Even if the price does not exactly come back to the support or resistance zone, it should come back close. Okay, so now in this situation, you can see that after the breakout happened, the price went back close to the support, and that was a proof that the breakout was valid before the sell continued. So right after this retest, or close to the retest, we would have just entered a sell somewhere around here. Okay, when we enter a sell, then we want to set our stop loss above this support, right above the support, because if the breakout is valid, then the price shouldn't get inside this channel again. So we can just set our stop loss. You can use a tight stop loss, right, just above the support, some pips above the support, and then you can, because this support has now turned into a resistance, right, it has turned into a resistance, so price is not going to, so it's not supposed to enter into the channel again. Then you can look for the nearest support. You can use these. This is a support level, this is another support level, this is another support level. You can just use the nearest support, or if you want to catch a longer move, you can look for a longer or a further support. and set your take profit. Remember, you can also use other indicators for additional confirmation. Okay, now we have been able to identify how to understand market structure. Now going into price action, analyzing price action. That is the next thing we are going to be looking at, analyzing price action. So now price action refers to how the price moves on a chart without relying on indicators. Okay, it allows you to see key levels, candlestick patterns, and momentum shifts. So now when we're talking about key levels, you want to identify important support and resistance zones where price has previously retested or stalled. So now important resistance and support zones is just areas of reversals, just like we have identified here. A zone. Now these are zones, yeah. It's not just one level, it's not just at a particular price, it's a zone, okay. So this is a resistance zone, this is a support zone. Remember, you just be looking out for zones where we had multiple rejections, minimum of two rejections right around the same level. Okay, so that forms a support or a resistance. Now this is a resistance, this is a support. We can see there was rejection here, rejection here, rejection here. We can see that this for support, there's a rejection here, here, right? Now it continues, you can find it all over the chart. Now the next thing is candlestick patterns under price action. You need to understand candlestick patterns. Look for signals such as engulfing patterns. We have talked about engulfing in the previous videos, so you might want to check out those videos to understand how the engulfing pattern works. But basically, the engulfing pattern is a pattern that shows, for a bullish engulfing, the engulfing candle is going to swallow up the previous candle. For a bullish engulfing, the bullish engulfing candle is going to be a bullish candle and it's going to swallow up the previous bear candle, right? The entire bull candle is going to be both higher and lower than the previous sell candle. Then as for a bearish engulfing, it's going to swallow up the previous bull candle. Now we have a lot of candlestick patterns, including engulfing, pin bars, we have the doji and all of them. So candlestick patterns are another important aspect of price action that you need to understand when trading, when using technical analysis. Is going to help you. Okay, so the next thing is trend lines. Trend lines involve Trend lines are dynamic and support resistant levels. So we can see trend line, basically you just have to look for two higher lows or two higher highs. That is for an uptrend. On the other hand, two lower highs or two lower lows. What I mean now is, when you identify 2 points of a high and a higher high, you can use that to draw your trend line. Identify 2 points of a low and a higher low, use that to draw your trend line. As for a sell, 2 points of high and high and lower high, use that to draw your trend line. 2 points of low and lower high, lower low, use that to draw your trend line. So trend lines provide dynamic support and resistance. We can use that to track future price movements, okay, potential reversals and continuation. For example, in an uptrend, when the price reaches this trend line, we can anticipate a reversal. When it reaches here, we can anticipate a continuation. When it reaches here, we can anticipate a reversal. So basically, that's how the trend line works. So this strategy, so far we have considered market structure and we have considered price action. Okay, now the next thing is to be able to spot key entry points, because timing your entry points is very, very important. Now the first thing you should understand is how to know when is the right time to enter a trade. Now as for breakouts, we already talked about breakouts. When you have a consolidation, when you have a consolidation, we already talked about breakouts, that after the price breaks and you see a little bit of a test, then it's a good sign that you should enter. You can't enter the trade. Now pullbacks is involved, like in a bull trend, when price gets to the dynamic resistance. For example, we are expecting it to pull back a bit before the trend continues. So if you want to be trading pullbacks, then after the price gets to this dynamic resistance, you can enter a sell your stop loss some pips above that resistance, and then you capture your take profit. You set your take profit or you capture the price, exit your trade when it gets to the dynamic support. That's for trading pullbacks, right? Now reversal is another way that people trade, right? Now you can decide to trade reversals. That is when the trend is completely changing. Reversals and pullbacks are not the same, right? Pullbacks is that the trend is still bullish or the trend is still bearish, but you are just trading against the trend. But reversal means the bearish trend is over and a bullish trend is about to start. For example, we can see this was a bearish trend and then this is actually a reversal because the bearish trend was over and a bullish trend actually started, right? So if you spot exhaustion in a trend, most of the times when a trend is about to reverse, we have a little bit of a consolidation, even if it's just for a brief moment. Now we can see that initially this was quite a steep bearish structure, but then before the bullish structure really gained momentum, we can see a little bit of consolidation, although the consolidation had a higher high, but we can see that there is a difference between the steepness of this and this particular section. So most of the times when a trend wants to reverse, we can see this was a bearish trend. This is a daily time frame. Okay, so this was a bearish trend. Then we can see a bit of a consolidation before a bullish trend began. This was a bearish trend. We can see a bit of consolidation before a bullish trend began. So if you want to trade reversals, you need to spot that exhaustion, spot that tiredness of the previous trend. Then once you have spotted it, you can now look for a good point to enter. If it is a bearish trend that just ended, you want to look for a good opportunity to enter a buy. You can use candlestick patterns. You can use support level to time your entry. You can use other indicators as well for confirmation, right? And then you can use your resistance levels for your exit for a buy and support levels for your exit for a sell. Okay, now you need to learn how to manage trades with confidence. Okay, learn, always place your stop loss to protect capital. Please, in all these methods that I have talked about, both the market structure, the price action, if you recall, I've been talking about setting stop loss here, setting stop loss there, setting take profit. These are very important, right? Very, very important. Okay, do not forget to set your stop loss, whether you are trading the reversals or trading the trend, trading breakouts, whichever way you are trading. Okay, make sure you always use stop loss and take profits. And then it's always good for you to have a good risk to reward ratio. Okay, if you are risking $1 and you want to make $2, that's a risk to reward ratio of 1 to 2. It is usually advisable to have a minimum of risk to reward ratio 1 to 2. Okay, and now one thing for you to know is that patience is key, right? Don't jump into trades without waiting for confirmations. Okay, it's very, very important. Try as much as possible to get confirmation before you enter a trade, right? Be patient, right? Trading is a game of patience, and you might want to use indicators as well. This strategy that we talked about is basically non-dependent on indicators, but you can just decide to use indicators for extra confirmations, right? And then you can also want to use other forms of um, both price action and market structure combined for confirmations. Okay, and then you can be going through multiple time frames. You can see I was in was it 4 hours before, and then I entered the daily time frame. While doing your analysis, you can be going through different time frames to get both a smaller view and a wider view of the chart, right? Is also important. Okay, for precise entries, like when you're about to enter a trade, you might want to go to small time frames, like maybe the 15 minutes or 1 hour, depending on the kind of trader you are. If you're a swing trader, maybe you can just go to the 1 hour to enter your trade, right? If you're a day trader, maybe you can go to something like the 15 minutes. But when you are doing your analysis, you might want to use a higher time frame to do your analysis so that you can get a wider view of the market, right? And then always keep your emotions in check. Stick to your strategy. Avoid revenge trading, right? It is very important that you keep your emotions in check. Okay, even if you experience losses, do not try to fight back. The market does not care about you. Sadly, the market doesn't care about you. So you cannot fight the market. So even if you experience losses, do not try to like go for fight back or trying to get a revenge in the market. You might end up losing more money. So another thing is that try to journal your trades. Okay, track your entries, your exits, your outcomes, so it can help you identify patterns and areas to improve in the future. Okay, now we have covered important things to note when trading the EURUSD, and this can also be applied to any other currency pair actually. Okay, I hope you found this video insightful. Kindly like, subscribe, and click the notification bell for more updates. Cheers and happy trading.